Pushing this now. Good afternoon, everyone. Let's do a quick sound check. Hopefully you can all hear us loud and clear. How you doing, Coach Paul?
Hey, good. Happy synthetic Monday.
Happy
Hope-
Synthetic Monday for sure. Let's get a thumbs up in the chat if you can hear us and see us clearly, and we will get right into it. Hopefully everybody had a good weekend, nice 3-day weekend, able to spend some time with friends and family or just away from the charts. Breaker 19 got the confirmation from Donald Keys, all good. Thank you. Thank you. Yeah, hopefully everybody had a great weekend. Let us know in the chat how your weekend was. Mine was very relaxing. Didn't do too much, but didn't spend much time on the charts either. It's always nice to get away a little bit when we can, even when we're forced to, right? The markets technically weren't closed, but I don't know how much trading we really wanted to do on Monday. But good to get some time off. Coach, how was your weekend?
Oh, great. Relaxing. Spent time with my son and my grandsons.
Nice.
Watched the Blue Angels fly around Lake Erie in Cleveland, and really enjoy watching the Blue Angels.
Yeah,
I could do that every day. It never gets old.
it's always a good show. Always a good show. Um, Welcome everyone to At the Buzzer, our market recap. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing risk. If this is our first time meeting, I'm Coach Jay. I've been a Topstep Performance Coach for a little over a year now. I've been trading in the markets for about 11 years. Started off trading stocks and options and moved over to futures about 5 years ago. And that's Coach Paul. Coach Paul, go ahead and introduce yourself.
Yeah, I'm Coach Paul. I've been with Top Step for around the same amount of time. Uh, I've been involved in the futures industry for 4 decades. I'm a old floor trading veteran. I've had my own commodity trading advisory, been registered as a Series 3 rep many times. Lot of experience and some wisdom, which I would like to impart upon our new traders. Maybe you can learn from some of the mistakes I've made, um, and get better as a risk taker and get over the hump and start making money.
Awesome. Well, thank you everyone for joining. The way we start every segment is by focusing on the top percentage movers on the day. We do want to realize with these percentage movers that Monday yesterday was not a settlement day, so some of these percentages are based on Friday's settlement. But to the
Good
downside, we
point.
have the. Go ahead, Coach.
That's a very good point.
Oh, got you. To
It's
the
exaggerated.
Exaggerated for sure. Still big moves though. To the downside, we have the Nikkei down 3.52%. We have crude oil down 4.31%. And RBOB gasoline futures down 5.24% for our biggest percentage mover to the downside. On the upside, we have soybean meal up 2.59%. Wheat futures up 2.72%. Shout out to Linda Rashke. If you heard her segment on Topstep TV, she was in a wheat long. 40 years or however many years of trading experience she has, she knows and she's looking in the right places. And then nat gas up 3.9% for our biggest percentage mover to the upside. We got the S&Ps down 2.15%. Nasdaq's on this list somewhere down 3.19%, and gold down 0.17%, kind of unchanged in gold. But let's get right into these charts. Actually, news. We did have news. We had a manufacturing PMI number come out lower than what was expected. Basically, meaning factories are seeing less production than what they expected, right? Which is not so great for the labor market. Coach, how do you look at that information if you do at all?
Well, I don't look at
Mhm.
I look at how the market went back and looked at that market did not
Yep,
and after that news came out,
pretty
it was
much.
free fall. Um, so even though we had um, Monday, quote unquote, off, action came after that number. It just plummeted. So that number came out really. I, to me, it seemed that it really affected the selling. There was no working any orders from this institutional side.
Got you, Paul. We're seeing some audio issues.
So
Paul, if you want to try to reconnect your headset, and I'll get into the markets. They're saying you're getting a little bit of an audio glitch from your side. So try reconnecting and coming back in, and then we'll continue from there. All right. But while Coach Paul is doing that, we will get into the Nasdaq. The Nasdaq, obviously, like we said, we see a 3% down day, pretty huge down day. And what I'm looking at, if we have the daily chart up, I'm going to take some of the drawings off that we have here. We've been talking about these moving averages. This is on a daily chart. The purple is the 50 moving average, which was right around 19,620 when we opened up today. The 20 moving average was at 19,300, and we have the 200 daily moving average down at 18,300 in the Nasdaq. Excuse me, Coach Paul and I were talking about this a little bit. And we talked about this at the highs, right? Where we made all-time highs below 21,000, and this engulfing day where we had 1, 2, 3, 4 up days and an engulfing down day to take out all three of those days. We're seeing a very similar pattern right now today where we had this 3% down day. It took out pretty much all of last week's action. And we've been kind of hinting at this rally that we're seeing in the Nasdaq not being very convincing, where we're not seeing a ton of we weren't seeing a ton of volume in this, and we didn't get a great volume to the downside today either. But I was looking at this move as potentially a short covering rally from the all-time high sell-off that we had. So decent opportunity, but again, these markets do look heavy for now. And I think we got Coach Paul back. Is that right?
yeah, does that sound better?
Let us know in the chat if Coach Paul's audio is better from there. And
I would just add that and that daily took out with heavy.
we're getting a no dice on your audio. Give me 1 second. Hold on.
All right.
Nope. Keep going, Coach. Keep going. Yep.
Okay. Sorry about that.
Audio's not clear. Let's get a check again. Go ahead, Coach.
Okay.
They're saying it's still bad for now.
Come back in.
All right. Thanks, Coach.
All right.
All right. So we'll get Coach Paul back in a bit. Let's just keep going. So we have go down to a 30-minute chart. We know that yesterday was the holiday, so we've seen some consolidation, but we were in this consolidation in the Nasdaq for pretty much all of last week, and we finally got the breakout of that. That was the move today. If we look at the moving averages on the 30-minute chart, again, the white line is the 200 moving average, and once we got a close below that, it happened during the London session. We didn't close back above it, right? We have the New York session open here where we're checking up into that moving average and rejecting it. Buyers can get price above it. And 19,500 is right there as well, right? We talk about psychological levels all the time. Whole numbers, big fat round numbers that the market is going to have a reaction at. And the reaction that we're seeing is that buyers could not push the market up above it, no matter what they did. I want to point something out in the Nasdaq that I think we kind of neglected to talk about a little bit, but it came into play all of last week, and where the move originated came into play towards the end of the session today. So I'm going to take the moving averages off for now. And last month we had a CPI and PPI reading. The CPI print was on the 14th of August, right? So August 14th at 8:30 Eastern time. I'm going to anchor a VWAP to that. And I'm also going to anchor another one to the PPI print, which was August 15th. And I'm going to mark that one green. Last thing I'm going to do, I'm going to frame out the candle that was our PPI print. And I'm framing out the PPI print because that was the heavier delta move from what we saw. So I'm going to frame that one out, and let's just look at it. So these anchored VWAPs, and again, these are from, the green one is from last month's PPI, the red one is from last month's CPI, and we can see, especially last week, how much of a resistance these anchored VWAPs are, right? And again, today, yep, I got you, Coach. Give me 1 second. I'll bring you in. All right, let's do an audio check now on Coach Paul to see if that's a little bit better.
How does it sound now? Any better?
Let me know in the chat if that's better for Coach Paul, please.
And Coach, why don't you continue? Because
all right, they said we're good now. You're coming out of my headset though. Give me 1 second. Go ahead, Coach.
okay, I'm ready
Perfect.
to go.
Awesome. Great sound. I can hear you. We're all back. We're all fixed. And Coach, what I was going over was last month's PPI print and CPI print that we had. So I anchored some VWAPs to that, and we can see it here, similar to that 50 moving average, but based on volume, the market was not trading above those anchored VWAPs for very long, right? Anywhere in between them was kind of a range, but provided some really nice opportunities. We see here, we looked in the London session this morning up to that anchored VWAP from PPI, and really that was the best trade location of the day. Of course, most of us aren't trading at that time, but a really nice sell-off from there. And in the Nasdaq, I'm going to frame out the CPI candle as well, because I think we traded into CPI from last month in the Nasdaq, but we didn't in the ES yet. And we can see it, right? So we had that CPI print from last month that started the rally, or continued the rally, and now we've sold all the way through that at this point, right? Sellers in control since that point. And just very interesting for the market right now.
I found it fascinating that CPI VWAP is basically the 50-day moving average in Nasdaq.
Yeah. Yep.
So, and just going through some reasoning is there's no volume above the 50-day moving average, right?
Right.
So they're not buying, there's liquidation, and it's not small as we saw today. I'm gonna remember that. For an old like me, that's like a work of art. Be fascinating.
I said I didn't spend too much time on the charts this weekend, but I did look at this. Coach, they're saying your audio is broken again.
I'm not even talking, boy.
All right.
I'll just be quiet. Go ahead.
But very interesting here, right? So let's go to a shorter time frame. We'll go down to a 3-minute chart to look at the New York session and what kind of opportunities that may have presented for us. You guys know that my favorite thing to do is to frame out the first 3-minute candle. So I have it framed out here. And if we anchor a view up there, we can see sellers were in control from the start, right? This green line that we have, I'll make it blue so it doesn't interfere with some of the others, but that blue line that we have is anchored view up from the New York session open. And once we left the opening range in the first, we'll call it 6 minutes of the market, we did one quick retest, and this for me is an A+ setup. I wound up losing money today. I lost about $700. But one quick retest of the range, VWAP left the range pretty early, and just a really nice trend day down. And not many tests of that VWAP on the way down, right? We got pretty far extended early, right? This selling here at 9:30 Central Time is what brought us away from VWAP, and the market never recovered. Never really had a chance to recover from there. I just, spoke to a few traders in the chat, and everyone's saying, "Hey, I'm not seeing a bid in this market at all." There were barely any relief rallies. I know Dakota made a lot of money today on the long side. In order to do that, you need great trade location, right? If we look at the high of this, we framed this out earlier, right? 19,159 was the high of the CPI candle from last month. We got a bounce there, right? Which makes sense, logical spot. We traded like any of the other news reactions where the market came down to this level, was a reaction to news and bounced off of it. But outside of that, that was a 70-point bounce. Outside of that, there weren't many opportunities to the long side to hold trades for very long, right? Trade location is important in managing your trades where you're saying, hey, I know that I'm counter trend. The market's down at this point, probably 2%. Could I look for a complete recovery of the move? Yes, but there are no other buyers in the market right now. Any buying to me looked like short covering, and followed up by continued selling coming into these markets.
Coach, does this sound better?
You sound fine to me, but it looks like it's not going through to the other side.
One comment is you said that
Dakota made 20,000 buying the Nasdaq today. Now that's great
Agreed.
trading. Imagine if he was on the sell side. I don't know. Would he have done any better? I mean, and why I bring that up is for those of you who are new and struggling, because I see a question here from Chris Bova. I started trading because I wanted to go short during volatility. After crashing an account during the QE, I am now scared to be short, looking for help. And that's a big question. But first, start off as we just talked about is whatever style of trading you're using, you have to define it and come up with a plan that
Agreed.
incorporates risk management to the sell side. I don't know what your combine is, but if you have let's say if you have a $4,000 combine, that's the 150,000. Don't lose more than 12% of that account on any given day. Stop trading, put it in Topstep X to cut you out at that number, and look for sells inside your trading plan.
Yep.
That's the basic bottom line. Coach, anything on that?
No, I agree with you. Where I see a comment from Chrome P Beats that says, "Why don't you guys go with the trend when it's bearish? Just look for sells." Absolutely, but again, we said with Dakota, he had a plan to go long, and a seller today could have lost money, right, by not trading with their plan and selling in the hole, if you will. And it was kind of hard to get into this trend once it really got going because there weren't many counter trend moves. But what you're saying, coach, is it really does not matter what trading strategy you use. I heard Linda Rashke mention the moon cycles today. I had a trader, in Discord speak about that as well. It doesn't matter what you use to trade as long as you manage your risk, right? If you want to talk to your dog and ask it for a signal and it gives you a good one, take the signal and manage your risk, because your dog's going to be right sometimes and it's going to be wrong other times. And that's not trading advice. That's just risk management advice. I don't care what you use.
You're barking up the wrong tree. Is that what?
Right. Just make sure your dog
and
eats
I'm
every night. It's okay if they get trades wrong.
just seriously, because the number one goal here is to preserve your capital. That's your account.
Yep.
So I I chose not to take longs today,
Hmm.
and I didn't lose any money.
Nice.
I'm I That's me. Um, I'm starting to look on the sell side. Look to sell rallies, but remember this: your job is to preserve the account. If you blew up, all right, you probably were taking too much risk, or you didn't have a plan to stop a daily loss limit. Personally, I think 50% is extremely way too much. If you lose 50% one day, to make it back, you have to make 100% on the account
Yep.
just to get back to even. Limit it, because there's a difference between a bad trade and a losing trade. Understand this. If you're new, you can make a perfectly good trade and lose money, and you can survive. But if you're making bad trades, which mean unmeasured risk, um, that's which starts off into tilt. That's
Yep.
bad trades with bad results. You can make bad trades and have good results, and it will catch up to you. So have a
Absolutely.
plan to sell, limit your risk, measure it, and we go through that on this show. So we'll go through more of that for those of you who've watched this and will understand the average true range of um, and using that to measure risk. We'll go into those things, but yeah, Chris, you can do it. It all starts with managing your account.
100%.
When you do that, and you can stop trading from fear and take losses.
Definitely agree with you there, Coach. I'm going to move over to the ES real quick because I just want to show a little bit of a divergence from what we were seeing in the Nasdaq. Again, I'm going to anchor VWAPs to the CPI is going to be the green one. PPI is going to be, sorry, PPI is green. CPI is going to be red. And we saw that they were a resistance in the Nasdaq, but they were kind of supportive in the ES. Again, they are two different markets. They do trade differently, but when support breaks, when the bow breaks, the cradle will fall, and down will come markets. um, and
Bulls
once
and all.
bulls and all, once that support broke, and then we broke below that 5600 as well. Again, major psych level in the ES, and if we look at a shorter time frame, we didn't spend a lot of time around 5600, which is what you would kind of expect with it being such a major level. But the market didn't care at this point. We got a quick bounce off of 5600, but really sustained volume on the move into it, right? If we look at the, again, New York session anchored VWAP, which is the lower red line now. Same thing in the Nasdaq. We left the range really early. We tested this 5600 and there was not a buyer in sight. We never reclaimed that anchored VWAP, and I think the ES gave you a few more opportunities to get in on retracements to VWAP than the Nasdaq did, right? The Nasdaq, again, really great market to trade if you're on the right side of the market and can manage your risk. But we see these expedited moves where the ES may give you a few more opportunities to jump into the trade. I thought it was really interesting. We had, Linda Raschke on today, and if you haven't watched that segment, I would suggest to go back and watch it. They started around 12:30 Central Time, so you can go back into the stream. The team is going to cut it out as well. But when she talked about trading the equities, she did not even mention the Nasdaq, not once. And I'm sitting here listening, and I'm just like, that's a ton of years of experience. I don't think she had it on her platform. I got to go back and look, but she had a bunch of different markets on her platform. The Nasdaq was not one of them. Again, I'm paying attention to someone who has run a fund, written books about trading, and all this other stuff. Go ahead, Coach.
I there's so much more opportunity.
Yeah.
Not even just in equities when we go through them every day, but sometimes to learn, go someplace a little slower
Hmm.
and, you know, learn how to execute a plan.
Yep.
Sometimes in the Nasdaq, it's like trying to drive, taking, a Ferrari out on the road, and you don't have a driver's license.
Yeah.
Um, when you like today, when you see Rips, now he can trade the Nasdaq. He's very disciplined. He's quick. Um, but he just didn't. And you can, from what I've heard his story, he didn't start out that way.
Correct.
There was a lot of heartache. I mean, so it's no shame to start out with the S&P or perhaps micro Nasdaq, micro S&P, because most of the people are just starting out learning how to trade. Um, if you were, like I said, don't jump in. You don't have to jump in the Ferrari and figure out how to take the turn, uh, because if you can't take the turn, where are you going to end up? So it's
Yeah.
very. I'm glad you brought that up because I did watch her and I've had nothing but respect for her. I've followed her. I've met her many years ago. She's very consistent.
Yep.
Um, by the way, we have a question from Leandro Silvieri or
Okay.
Silviera. How to add these lines?
So the lines I'm adding are anchored view up, and they are in the drawing tools on Top Step X. You want to go down to forecasting and measurement tools. I'm going to click on the right arrow there, and I have anchored view up. I put a star next to it because it's something I use all the time. So it's up here in this little drawing panel that I have. So I'm just going to click for anchored view up, and then I want to click on a candle that I want to know the market's reaction. I want to know the market's reaction from the time that candle printed, right? So for me, I'm going to use the session open, which is 9:30, New York session open, which is 8:30 Central Time, or I'm going to find a high volume candle and anchor from there, right? So I'm just going to click and it adds the line. But to me, the ES, again, if we look at a higher time frame, we're going to frame out those news candles, PPI, CPI. I think we tested into the PPI candle, and this is from August 15th. August 15th. And I'm looking at, and on another platform, you guys, I know I use Quantower as well. I'm seeing a big buy side imbalance at 55.12. So that is going to be a level that goes, and I mean, we kind of checked down towards it. We didn't hit it exactly, but that's going to be a level on my Top Step daily levels tomorrow. And then there was another one a little bit lower. I think it was at 55.04. Remember, the Nasdaq already traded through these two prints, right? PPI and CPI. The ES is a little bit slower to do so. We know that the ES was a little stronger above these anchored VWAPs, where it was using it as a support. The Nasdaq was using it as a resistance. So if we're going to continue to move to the downside, the ES, I think, has maybe a little bit further to go, where we would still trade through these candles. Go ahead, Coach.
Well, it's interesting. The Nasdaq it closed below its 50-day and 20-day moving average.
Mm,
Well, the S&P held its 20-day moving average. I have it at 55.09,
okay.
08.5 on the daily. Um, it's a tale. It's two different markets.
Yeah.
Almost tempted to go back to spreading between them. I used to do
Interesting.
that many years ago.
Yeah.
Yeah. And you know, it works. I don't. It works, but you have to know. You have to have some experience doing it. I'm not giving that out as as a strategy,
Yeah.
but it's interesting that S&P has been much stronger than the Nasdaq. Nasdaq is just
It's
it
getting beat
looks like a
up.
different market. It's getting beat up.
Yeah. Well, we didn't talk about it, but when you have Nvidia down, I think it was 9.5% today. We talked a little bit last week about the uh, expected move from earnings, right? I believe to the upside, we were looking at $135, and to the downside, we were looking somewhere around 111 based on the options data going into that earnings report. Nvidia closed, last time I checked, it was $108. So that move to the downside did confirm. I know the last time we looked at Nvidia, that $108 was also very close to the 50-day moving average. And again, being the second heaviest weighted company in both of these indices, when Nvidia has a down day like that, it's going to affect these markets as well. So really interesting there. I didn't see any news for Nvidia specifically, but just a really strong down move today. We got
Well, it's interesting, and maybe it's a more macro environment, is
mhm,
what's happening in China.
yeah,
China is showing a lot of weakness. Um, we saw it in crude oil, which we'll go probably into next.
right.
But I think th- th- it appears to me that the world macroeconomic situation is kind of heavy right now. And stocks that were high flyers on the way up usually are the weakest in the correction, um, especially without any headline news. I mean, I don't. I looked. I didn't see any big news in Nvidia that was.
I'm seeing in the chat from Nathan and DragonSpec saying some antitrust violations. So Nvidia being sued by the Justice Department. So maybe that could be it. But who knows? Very interesting stuff. Very interesting. But let's get into crude. If there's nothing else about the ES or Nasdaq you want to talk about, Coach.
No, I'm good with that. Let's go to crude. I'm just glad I didn't fill up over the weekend.
I
I
mean,
might go do that this afternoon.
all crude is doing is the 80 to 70 range bound pattern that we've talked about. From a technical perspective, right? We've talked about this. Crude, for whatever reason, does not trade over 80 often this year. And to the downside, we're seeing, this 70 to 71 area be somewhat of a support, going back, if we're looking at a daily chart, uh, going back to pretty much the beginning of the year. Crude, I did see headlines that said crude gave up all of its gains for 2024, which, sounds dramatic, but if we look at it from a chart, it's crude is at the low of the range. Crude is at the low of the range. Crude gave up all of its gains pretty much in June as well, and we got a 12-point bounce from there, a $12 bounce in crude. But we are at new lows of the year for crude oil. And headlines in crude: OPEC is poised to still increase production, while we're seeing a slowdown in Chinese and U.S. manufacturing, which may lead to more of a supply in crude oil. Coach, you were mentioning China. How do you look at that?
Well, as you just brought up, crude is cycling between 80 and 70.
Right.
Um, but overall, the crude has been named, at least when I was an econ major, it is the lifeblood of the world economy.
Hmm.
It's not a financial product. It's traded. It's always used. It's the measurement of the energy of the economies of the world.
Okay.
I mean, so if it's weak, usually forecasting some weakness somewhere. Um, Now, if it broke under 70 and continued, I think that would be shocking. That would be more relevant.
Hmm.
But I'm just seeing more headlines of Chinese weakness. Um, so and then seeing crude. Plus, this is 2 days. It's not one day,
Right.
really. I don't think they were celebrating Labor Day in China yesterday. So some of that is already in the pie. So the overall macro. if crude doesn't keep its cycling like we've been saying, what has it been all year?
All year.
Um, I'm going to see tomorrow if it goes and it closes on a daily basis under 70, then I would say, well, that's a red flag.
Yeah, it's prices we haven't seen, this market close at literally all year, right? We're 8 months completed into the year, and we have not seen crude close under 70 at all. So that is a change for what the market has seen so far. So 70 is going to be very important. We didn't trade below it today. And, if we do get a daily close under there, that is a different story for what we've seen in the market so far. But if we're going to go with patterns or patterns, maybe expecting to see some buyers come in and step in crude here at the $70 level. But of course, we don't know, and anything can happen. Let's look at it on a shorter time frame, see what kind of day trade opportunities it did present. Where in this range, right, the 70 to 80 range, it has provided some really nice opportunities. I'm going to put up your moving averages again here, Coach. On a 30-minute chart, we have the white is the 200 moving average, purple is the 50, and the yellow is the 20 moving average. We can see the 20 and the 50 are below the 200. And then at some time during the Asian session, we got the 20 to cross below the 50, which is our shortest time frame, showing us this downtrend.
Wow, look at that volume on the left. That big volume, was that from Friday?
This is Friday's open. Yeah, so there was some news. What is this? PCE print.
Okay,
And yeah,
that's a massive volume, and this is Coach Jay's. It never went over that candle on that high volume, and
yep.
it's nothing but drift. And by the way, that high was the 200 bar moving average.
Mm-hmm. Yeah,
So just from that point of view, I don't see, like today in the stocks, the only time I really want to buy it is to cover a short. Um, Boy, that looks heavy.
it does.
So probably time to buy it.
Right. It always buy it when everyone else is scared, right? And you may see a little bit of drawdown still. Again, that is not trading advice. That one was kind of just a joke, but maybe not so much a joke. Where if we're going to go with what the pattern says, this is where buyers have stepped up in the past in crude oil, pretty much all year.
And once again, that heavy volume candle holds right off the open, right?
Yep. This is 7:50 Central Time, where we did get that highest volume spike, and from there we did not close above it. And again, these are, to me, we're pointing these out. I didn't trade crude today. I traded the ES. I took some losses on the ES trying to sell it in the hole. But these are the setups that personally I want to be looking for, and I think, Coach, you're looking for as well, where we have some heavy volume and the market just rejects those prices. Right at this point, there are no buyers here, and either they're stops getting hit on longs or new shorts joining this market. But once we see that volume come in, and this is pretty late in this move, right, where we had the move started overnight in the London session, it looks late in the move at this point, right? If we only see the market like this, that looks like it may be the low or potential to be the low, but heavy volume. And then we're just reading the market from there. There is no continuation or reversal here. There is a continuation, sorry, to the downside, where we're seeing the volume come in and continue to sell this.
Yeah, it's hard to, especially on a day after a 3-day weekend,
Mm-hmm.
is if you're looking just at the price, like level, without the volume or
Yeah,
some other type of interpretation, it can be very hard to sell crude oil $1.50 lower,
right.
which would be the right, was the winning trade. But as you get more experience, just flat price sh- it should not stop you from doing the right trade. Like what I mean by that is selling that at that time, I think it was $1.50 lower.
Yeah,
And,
at this point. Yep.
and if that was the only reason you didn't sell it, you missed out on a lot of opportunity. And why I say that, I've done that. It's like, oh, it's too cheap now, and all of a sudden, well, now it's cheaper.
Right.
Um,
I think.
if you want to sell it, yeah, go ahead, coach.
No. Go ahead. If you want to sell it, go ahead. Finish that thought.
If you want to sell it, don't just be sensitive to price only. What I mean by this is now you have some volume too.
Hmm.
You have some other variables that are going to help make that decision. The
Absolutely.
reason I say that is I missed out on a lot of trades, and that can happen in stocks that keep going up, right? Well, I
Yep.
can't buy it here. It was 50 last week, and now it's 60, and then 2 weeks later it's 80. Um,
And that's where
and
the.
why I say that is just price alone is is not enough in my opinion.
I would agree with you. I would agree with you. I think what's important here, because we are day trading, right? So we want to make sure where at this point for a day trade, you technically would have been selling in the hole. You're selling the lows of the day at that point. But, it's important to get the whole picture, right? Where if I zoom out and we're on a 30-minute chart, maybe a daily chart, even on a 30-minute, right? This is proven to be a demand area, a bounce area before. But that's why we manage our risk, right? If you take the short there, this looks like a momentum trade. It looks like there's a continuation of this move, but I can't risk my whole account if it's not, right? I can't say, yes, this move should go lower, so I'm not even going to have a stop loss. I'm going to trade 15 contracts for it to go down because it could be one of the percentages where the market does bounce from here, right? We've seen it bounce here before. It could have been one of those times. So I think at this point, I don't know what the tape looked like. I'm assuming it was all selling. I don't know that this was the easiest trade to take, but I see some confirmations in we got this heavy volume. VWAP anchored to that is leaving towards the downside of that range as well, where it gives me at least an area to limit my risk, right? The market could turn around and bounce 5 points from there, but I don't know that I would risk more than the high of that candle.
I agree. And if you can't afford that, don't take the trade
Right.
or do a mini. Do you have
Micro.
micros in the Crude too?
Yeah, it's micro. So these are the minis, and then so minis and micros on Topstep accounts. So
So micros, you can. What I'm saying is, have an exit plan before you enter the trade. You could buy this actually. I'm gonna say you had a price. I like this price only.
yeah, you could have bought 72s, right? Because where this happened, where this heavy volume came in was right at that 72 level, right? We talk about these major levels all the time, and 72 is a psych number in Crude, right? It ends in double zeros. It's a whole number. You could have said, hey, heavy volume into that. We've seen this trade play out a few times, right? Heavy volume into it. We see a reversal of that move potentially. Maybe a price target back up at the highs of this candle. Again, limit your risk. It doesn't matter what trade you took. We don't always want to frame out the trades that would have worked because there is a scenario for buying this, right? I know a couple of traders in Discord said they bought it. If we're looking at a 30-minute chart, we already called out that demand area where the market bounced prior. You could have made a case for buying this.
No. I mean, like once again, Coach Dakota making a killing buying the Nasdaq today.
Right.
I know this. I could never do that.
Yeah. It's tough.
It's not in my wheelhouse.
Yeah.
But that part, even here, was where are you wrong if you buy the Crude? To me, look at that candle. If it makes a new low, I'm not hanging around.
Mm-hmm.
My biggest risk would be two average true ranges. At this point, that's where my biggest risk, or make a new low. Whatever comes first. If not, I'm holding on. That way, when you have an exit before you get in.
Right.
This is really important. I'm going to come back to it and we've talked about the principles of successful traders. Accept the risk. was
Yeah.
one of the rule. Accept the risks or don't take the trade. Well, if you get into the trade first and then you go, well, where am I wrong? You- You're behind the 8 ball,
Agreed.
right?
Agreed.
I mean, because now you can make it. You can find any reason to hold on.
Yeah.
I believe me. I have a whole list of those I used to have.
One of the worst reasons is, oh shit, I can't take this loss.
I don't want to, and I'm not laughing at people because if you've traded long enough, you've been there,
Yep.
and
Absolutely.
there's, and that's the beginning of the end, in my
Hmm.
opinion.
Yeah.
I have a
If you're,
question here,
go ahead.
Jay. What is the difference between micros and the E-mini crude?
It's a tenth. It's a tenth of the contract size, right? So yeah, it's a tenth of the contract size. So
So
the
it's
tick value is,
$1 ticks versus $10 ticks.
there you go. There you go. Thank you, coach. The tick value was not coming to me. So it's $1 tick.
The mini contract is 5, and the regular contract is $10 a tick.
There you go.
So
There you go. So we covered the 4 markets. Just real quick, we
you
are
do
looking.
gold?
No, we didn't do gold. So let's do gold after this. We are looking
Oh,
for traders who want to come on Topstep TV to trade with us and share their story. Everyone is welcome to apply to that. So if you want to be on any of the segments, power players, maybe even getting on a fast markets if you're a funded trader and you want to trade with the team, we are doing a casting call. So I'm going to put the link in the chat for that. Go ahead and fill that out. The team is going to review any submissions, maybe give you a call, set up a quick interview for you. And if you want to get on Topstep TV, maybe even on here with Coach Paul and I for At the Buzzer, go ahead and fill that out, and the team will be reaching out to you from there. Let's get into gold, Coach.
gold, the shiny metal.
The shiny metal. Let's see. I didn't look at a gold chart at all today. Lido is not that type of casting.
Not
Not
even going
that,
to know.
not that type of
No,
casting.
no,
Gold. So gold, pretty similar to the Nasdaq in the ES last week, where we were in this consolidation, and we broke out of this consolidation again. I did not look at a gold chart really all day today. There was enough action in the equities, but consolidation, and we broke out of it. I'm curious now to, and you guys are kind of just going through the charting with me right now. We anchored VWAP to PPI and CPI for the equities. Let's do the same thing for gold. Our green one is going to be PPI. Our red one is going to be CPI. And let's see. Oh, wow. Would you look at that? Would you look at that?
Oh, it looks like Nasdaq.
It looks a lot like the Nasdaq, where once we settled under, again, it was last week, we kind of chopped around it, started to use it as a support. And I'm going to suggest that, going forward, maybe this is something that you add to your trading, right? We have these CPI, PPI print every month, right? Anchoring a VWAP to that. And coach, we've seen this even when we were doing this in Discord. Anuj just said it, event-based anchors. We're getting what the market's sentiment is since that number printed, right? And when we do it early, right, you guys know how I frame out news candles, and we identify how that news candle presents us opportunities, right? We get a close outside. We have anchored VWAP from that news, leaving that range as well. Buyers are in control. Any pullbacks to this are going to give us opportunities to take a trade potentially in that opposite direction. And then when we see volume go through it, where do we check back down to? Where the news started, and then we get a bounce. So
And boy, that works in what? How many different markets?
all of them.
And just to go, and those are the numbers, the big numbers, the
Mm-hmm.
economic numbers that move markets.
Right.
So attaching a volume to it going forward is I love the idea.
Yeah,
Because the big players, which isn't me or it isn't Coach Jay, we're not moving markets,
might be Linda.
but my if so, that's where large it's volume. It's not just price. So how that sustains itself can be very eye opening.
Right. Yeah, so low in gold today was 2504. We bounced off of the high of that PPI print. So really, really interesting, right? I'm looking at these now like, hey, you should have did a little bit more pre-market prep in gold because you might have traded this instead of trading the ES. But really nice trade here. And again, Coach, you said it looks exactly like the Nasdaq, right? Where we came up during the London session, check those anchored VWAPs. I'm pretty sure if we put the moving averages on, let's go to a daily. Does that line up with the 50-day moving average? No, it doesn't, because the gold has been in this uptrend.
Yeah.
Gold has been in this and is still in the uptrend, right? On a daily, the 20, 50, 200 moving average are still very much in an uptrend. But a bit of a consolidation here. Coach, I wanted to ask you something. So we have, the end of summer, right? Everyone's kids are going back to school. We're expecting that this is the time that volume comes back into the markets. We know we have big news out the end of the week. And then we got a FOMC meeting 2 weeks into the month. Do you look at a possibility of us staying in this range, in these ranges, in these markets over the next 2 weeks? And of course, we don't know what's going to happen, but
Right. And with that, I don't.
yeah,
2 weeks is too much time. I don't.
yeah,
Forecasting is prediction.
hmm
And at the end of the day, what is prediction? It's 50-50.
right,
I don't and then when I get that, and we've seen this now for how many times we're waiting for FOMC, we're waiting for CPI, we're
hmm
waiting for Godot, for those of old enough to remember that. We're always waiting,
right.
but in the meantime, there's
There's
opportunity.
trades happen. Yeah,
So it wouldn't be surprised. Anything we've heard this, anything can happen. Right now, I mean, I looked at the S&P or even gold. I like this. I'm looking to buy it.
nice.
It's in an uptrend. We had that little spike down today. That's its 20-day moving average that we wicked and we closed above. You could see some buying come in. I still want. Yeah. I don't. 2 weeks is
A long time.
for day trading. Well, that's a lifetime, right?
Absolutely. Yeah, it is.
And I still believe this is trading in the moment, trading in the present. It's either I find something that fits my risk parameters, fits my trading style. If I can't find that, I don't trade.
Yeah, for sure. And I agree with you, right? Whether we stay in this range or not, also the parameters of the range matter. Where technically in the Nasdaq, we're still in this range that we've been in for 2 weeks, but we had a 600-point down day today. There's opportunity even if we zoom out and it is a range, right? I could zoom out to a monthly chart. Zoom out far enough, everything is a range, right? So, like you said, Coach, pay attention to what it is as far as a day trade goes. And a lot of these markets are still presenting opportunities. Gold being one of them, where we kind of just left off, but a 1%, 1.5% down move in gold today, there's still opportunity here.
Plenty of opportunity, and I really want to come back to this.
Mhm.
This is day trading,
Correct.
and I had to make adjustments for day trading because my biggest strength is swing trading. Day trading is different. It's a lot different. It's you. I like to hit relatively. I like to hit doubles and triples and home runs. I'll strike out swinging on a swing trade, but day trading, if you're making, you can make 300 to 500 a day,
hmm
and in your losing days, lose 200. Do the math.
It's,
Do the math.
it's a pretty good salary.
I mean, it's a pretty good salary. And one thing I think that can get us as traders, day traders, in trouble is the fear. Well, we have is that there's always something out there, right? It's the boogeyman. It's the ghost around the corner. It's the fear of losing.
Right.
And I think that gets heightened when we're waiting for the big number. I mean, and then
And then
how many times?
what do you do with the big number, right? It's just like, oh, I want to ask this girl
Oh, I
out
can't.
to the dance, right? And I'm gonna wait and build up the courage to do it, and then it's just like, oh, damn, she already has another date.
She already has another date.
Guess
It's
I'm
my
going by
best
myself.
friend, and he's and he's not as good looking as
Right,
me.
right, right. But he had the courage to just step
But he had the
in
courage
and
to do
ask,
it.
right? So you
Yeah.
gotta, there's always going to be something to wait for. There's always going to be a bigger news. There's always going to be bigger potential for a trade. But at the same time, how often do traders truly take full advantage of those opportunities when they happen, right? 1,000 point trade in the Nasdaq, and you're like, oh, I took 20 points out of it. Identify your setups and take the trades that present themselves to you. Maybe you don't trade every day, but most of our setups, I think you can find in the four markets that we just covered. Out of those four, you can find one of your potential setups probably every day. Um, and if you don't want to trade every day, that's up to you. But uh, most days I think give us opportunities in at least these four markets, and if not, they're outside, right? We heard Linda Rashke talk about wheat futures today, and I'm going to pull up a wheat chart real quick. And Coach Jack was talking to me about corn a little bit last week, where these markets, the ag markets, have been under this very heavy sell pressure all year, and maybe seeing some short covering. I think it's very interesting that Linda Rashke was in this trade as well. But here you go. If you couldn't find anything in the equities markets, if you didn't know what this chart was, who would take a trade here? If you had no idea what market this was, I can't do polls, but put it in the chat. Is this a market structure? Because I think that's important, right? And we did this in Discord, Coach. I don't know how many
Yeah, that's
traders
good.
are here from Discord or new to doing the session with us. Identifying the market structure that makes sense to you, regardless of the market that you trade. How many of us would look at this and say, hey, I can find an opportunity in this, as opposed to the trader who sees a range bound market and says, that's where my opportunity is, right? And again, this is doing this in hindsight, but some traders might look at this and say, I cannot stand these type of markets. I can never figure out where to get in. It feels like it's going without me, and I'm going to buy the top. Maybe that's not your market structure to trade, right? Maybe you need to trade something that's more so in a range. And let's look at something like British pound. Maybe in a little bit more of a range where we can have well-defined, highs and lows and trade from there. So I think market structure over the market that you want to trade, patterns that you can consistently say, hey, I've seen this happen. I can limit my risk here, put on a trade here, and this is what I can expect. Each market, of course, has its own personality and is going to move a little differently. But there's a ton of opportunity out there.
And I will second that, Coach. Is Go ahead and use your practice account. If you don't can if you see something and you don't feel comfortable in it, put it in your practice account, and
Yep,
then make notes. Like, oh, okay, that's not the biggest fear that I have is what, and 90% of us, it's what, losing money.
correct.
And it comes to an old trader at the board of trade who trained some of the best traders. Some of them have a multi-billion-dollar fund. Their mantra was love your losers.
Absolutely.
I remember the first time they said that. I won't. I don't want to put $5 into the swear jar,
Yeah.
but I'm like, here, take my losers.
Yeah.
Love them like only you can love them. I can't love them that way.
Right.
You can adopt all, but because I didn't understand, is being able to take risk and limit that.
Correct.
That's to me, it's the best. That's what good traders do. And so practice that. Use your if you're not doing it, practice. Use your practice account.
Absolutely. Absolutely. Well, we are almost at the hour. I'm just going to go over real quick what we have for news on the calendar going into tomorrow. There is a lot of it for the rest of the week. We'll just cover tomorrow. We'll keep you updated on the news going throughout the rest of the week. While I'm doing that, if you haven't done so already, go ahead and hit that like button. Tell your friends and family to subscribe. Topstep is on the way to 200,000. I know we're a little far away from 200,000, but we can't get to 200,000 if we don't get you and your friends and family to subscribe. So on the calendar for tomorrow, the news starts pretty early. We have a ton of, I see Spanish services PMI, Italian services PMI, German services PMI, then in the UK. So we may get some movement in the London session in some of the equities. And then going into the New York session, we have Canadian trade balance at 7:30 Central, US trade balance as well. Bank of Canada rate statement and decision at 8:45 Central. And then we have US JOLTS job openings at 9 a.m. Central Time and factory orders at 9 a.m. as well. So a lot on the calendar. Again, the way I look at news, I think the way Coach Paul looks at news is news expedites a technical move and can present opportunity. You do want to be aware if you're holding a position into those numbers of the volatility. You'll see it before it happens, right? The order books are going to clear out. You'll hear it mentioned on Topstep TV as well if you're watching that, hey, there's a number coming out, Eddie, with the 5-minute warning. Maybe you want to close your positions if you're in one. And great filibuster, we are talking about practice. Shout out to AI. I got nothing else. I hope everyone had a great weekend and a nice start to trading. It is a short week. We're already going into Wednesday, which is awesome. Make sure you trade well, manage your risk if you trade tonight or into tomorrow. Coach, you got anything before we go?
Yeah, just trade, fill out a plan, trade your plan your trade. Like, if you're not doing that, get on the bus. Life becomes easier when you have a plan.
There you go.
You have a focus and a goal, and then you can do much better.
Have a focus, have a goal, create a plan, trade your plan, manage your risk. Thank you everyone for joining, and shout out to Andrew, our mod, for always answering and sending us the questions. Thanks again, as always, for doing that. And to all of you, make sure you send questions, right? Send out questions. There's no stupid question. There are some stupid questions. But no question is too stupid to ask. Send it. That's why Coach Paul and I are here to answer them all, hopefully to help you in your trading journey. Thank you everyone for joining us today. We will check you all out tomorrow. Have a great night and see you then. Bye.